Welcome back, guys. We were discussing about the nature and features of a company, right? So you've already learned about separate legal entity, you've learned about perpetual succession. Now let's start with the remaining three features of company: limited liability, artificial person, as well as common seal. Limited liability. So what does limited liability mean? Now, while I was explaining about separate legal entity, I told you the members are not liable for the debts of the company, right? In case of a sole proprietor, his liability is unlimited. In case of partnership under IPA Act 1932, all the partners are personally and severally liable for the debts of the firm if at all the assets of the firm is not sufficient, right? In case of limited liability partnership, as the name itself says, it's a partnership which is a combination of company as well as partnership, right? So, the liability of the partners in LLP is limited. Now, coming to a company, that means the funds of the company is not sufficient to pay back the debts of the creditors. The members cannot be called upon to contribute from their personal assets. This is one of the biggest advantages of company, that is limited liability. So, the debts of the company in totality do not become the debts of the shareholders. There is no mutual agency. The members or the owners of the company are not liable to make good to the losses suffered by the creditors. Okay. The liability of members of the company is limited to the extent of the nominal value of shares held by them. Now, there are types of companies based on liability. We have limited company, we have unlimited company. Okay. Under limited, there are two types. One is by shares, one is by guarantee. Now, either limited by shares or limited by guarantee, the shareholders' liability will be limited. In case of a liability of shareholders of a company limited by shares, their liability to make payment will arise as and when the board of directors are making calls on the shareholders. That is, the board of directors, since they are entrusted with the responsibility of the management, they will have to see how much funds are required from time to time. Okay, the entire nominal value of shares will be divided into smaller parts, or you can say installments. Okay, so first will be on the application time, then the allotment, then the first call, second call, and then the final call, right? So, when the liability to make payment to the company will arise whenever the board is making such calls. But the liability in case of a guaranteed company, that is company limited by guarantee, what happens here is the members will not pay payment at the time of becoming member. Okay, they will only guarantee, that is they will only promise to the company saying at the time of winding up we will contribute so and so amount to the company. What is the so and so amount which is guaranteed or fixed at the time of becoming member? So, in case of a company limited by guarantee, the members are liable only to the extent of the amount which they have promised or guaranteed by them, and that too only when the company goes into liquidation. Okay. So, when we will discuss about types of company, we can discuss in detail. So, whether it is limited by shares or limited by guarantee, no member can be forced to pay anything more than the shares that they have subscribed. Only if there is any unpaid value. Let's say 3 calls are made, the remaining calls are pending. Only to that amount the shareholders will be liable and not anything more than that. If it's an unlimited company, the liability of members is unlimited as well. Now, as I said, companies are based on liability, will also include unlimited liability company. Okay. If the company at the time of formation is registered as an unlimited company, that means the members who are subscribing to the shares of that company are agreeing that their liability is going to be unlimited. There is no limit on their liability. It might reach to their personal assets also. If they are agreeing to start such company, then the members' liability will become unlimited. So, this is the feature of limited liability. Okay. Moving forward to artificial legal person. So, as I said, person. Why is it called as a person? Because a company will also have the same advantages or the benefits or the privileges of a natural person with few exceptions. Okay. Just like I and you can be recognized by name, we have our own identity, we have our date of birth, we can purchase assets, we can enter into contracts provided we have contractual capacity. Likewise, even a company is identified by a name. It is having the capacity to enter into contracts, It is having the capacity to purchase assets in its own name, that is all the land and building, plant and machinery, stocks, or any inventory for that matter. Everything will be purchased in the company's name. Any contracts made will be made in the company's name only. Okay. Prior to incorporation, that is the pre-incorporation stage, only in that stage the promoters are allowed to enter into contracts on behalf of the proposed company, because company has not come into existence. So promoters will be acting on behalf of the proposed company. But once the company is incorporated, the contracts may be either adopted or rescinded depending on the nature of contract. Okay. So whatever privileges a natural person has, even the company has, but with few exceptions. Now what are the exceptions? If at all there is any default with respect to compliance. Now who is responsible? Company is also responsible because it is a separate person. It is identified by law. Likewise, the persons who are supposed to follow the compliance, that is officer in default. Okay, going forward you will be learning more provisions about Companies Act. Whenever there is any non-compliance, there is also a consequence. Now consequence could be either by levying penalty or imprisonment or both, right? These are the three types of penalties. But company, since it's artificial, it's existing only in the eyes of law, you cannot imprison the company. Okay, so company will be only liable to pay a penalty if there is any non-compliance, but officers in default will be liable to either pay a penalty or imprisonment or both, depending on the nature of non-compliance. Okay, so company is a person, it has a privileges like a natural person with few exceptions, which is recognized only in the eyes of law. It is only recognized from law perspective because it comes into existence not by a natural process but by an artificial process. So that is why a company is called as artificial legal person. So a company is an artificial person as it is created by process other than the natural birth. It is legal or judicial as it is created by law. It's a person since it is clothed with all the rights of an individual, which I have just mentioned. Being a separate legal entity, it can own property, it can have a bank account, just like how you and I can have a bank account, transact in the bank account, like maybe making a deposit or taking a loan. Similarly, a company can deposit money in a bank, can also withdraw money, that is a OD, or take a term loan from a bank, but in the bank's name only. Okay, then raise loans, incur liabilities and enter into contracts, except that it cannot be sent into a jail, take an oath, marry or practice a learned profession, because it is not a human being, right? So company does not do a thinking business, what contracts to enter, what not. That is why we have board of directors who will be responsible for making a rational decision for operating the company. Okay, so company is a separate legal entity. That is, company is free, company is separate from its members, company is separate from its directors. Company is an artificial person because it has same benefits or privileges like a natural person, but with few exceptions. Okay, moving on to the next one. As a company is an artificial person, it can act only through some human agency. Now, who is this human agency? That is board of directors plus members. Okay. Now, I told you members cannot take part in the day-to-day affairs of the management because there is no such provision given in Companies Act. They have to appoint directors and collectively all the directors are called as board of directors. Okay. Now, the day-to-day management, the board of directors will take decision. But there are certain decisions even the members will make. So, the entire control is divided between the board as well as the members. So, section 179 talks about powers of the directors. Section 180 talks about restrictions on the powers of directors. Okay. So, wherever the directors cannot take any decisions, that means it is not within their purview, they have to take approval from members. Now, for convening members meeting, we have general meeting, which is AGM and which is EGM. Okay. So, annual general meeting is a meeting of shareholders which is convened only once in a year for transacting certain mandatory business. Okay. EGM is convened whenever there is any special approvals to be taken from members. For example, when a company is shifting its registered office from one state to another. Okay. let's say from Karnataka to Maharashtra. In that case, only board's approval will not be sufficient. First, it starts with the board's approval, then the members' approval should also be taken. So, this becomes a special business for a company. For alteration of a memorandum, that is changing the register office from one state to another, a special resolution should be passed. Okay, so that happens in the AGM, or it could also be convened in the annual general meeting. So what I'm trying to say is, a company being an artificial person, it cannot decide on its own which contracts to enter, where to invest, where not to invest, how many properties to buy, what properties to sell, when to sue, what happens when a person is suing the company. All these actions are taken by the human agency. It could be either the board or members depending on the decision. Okay. Next, the directors cannot control the affairs of the company and act as its agency, but they are not the agents of the members of the company. Now, as I said, board of directors are taking decisions for the company. Do you call directors are the agents? The answer is no. There is no mutual agency, I have been telling you. Now, let's say in a law of agency, the principal is responsible for the actions of the agent. For example, let's say I am the principal, I am a seller, okay, and I have established branches all over India. Now, as a seller, what is my right? To deal with the goods. I can have title to the goods, I can sell the goods, I can have the possession of the goods, I can receive payment for the goods sold, right? And also I can keep those goods as pledge and I can raise loan. These are the rights that a seller will have. But now I have branches all over the country. I cannot be physically be present in all the branches at the same time. So what do? I appoint a mercantile agent. In each of the branches, I will appoint a mercantile agent, where that mercantile agent will also have same rights like a seller. Okay. He will not have the title to the goods, but he can sell a good and pass a valid title. So in sale of goods, you've already learnt a sale by non-owner, right? This is one exception. Can the mercantile agent own the goods? Own as in possess the goods? Yes. Can he take loan? Yes, if he is authorized by the principal. Okay. Now let's say he has sold some goods to the customer. He has made a contract. The possession has not been transferred from the mercantile agent to the customer, but customer has made some advance payment. Let's say 1 lakh rupees. Now after receiving this 1 lakh rupees, the mercantile agent is absconding. Okay, he is not traceable. He has not delivered the goods to the customer, nor he has made that payment to the principal. He is absconding. Now the customer will have the right to sue the principal. Okay, so principal has to make good to the losses suffered by the customer. So basically, principal is responsible for the actions of the agent. This is the basic principle of law of agency. Now, since directors are acting on behalf of the company, they are not treated as agents. Okay, there is no mutual agency in case of a company form of organization. So that is the meaning of agency, that is the directors are not treated as agents of the company, though they are acting on behalf of the company. So these were the features. Now coming to the last feature, which is a common seal. Okay, so common seal is nothing but the official signature of the company. Now I told you company can enter into contracts, right? So when you get into an employment contract with a company, your name will be mentioned and the company's name will be mentioned. Now every contract will have a right and has some obligations on both the parties. With respect to employment contract, what is your obligation? That is, you should be abiding by the rules of the contract. You have agreed to the employment contracts, that is what work you will be doing, what should be the office timings, the dress code, the attendance, the time in and time out, everything if you fulfill, the company will give you a consideration, which is nothing but salary, right? Now let's say either one of the party commits a breach. Let's say you have been working there for like 1 or 2 months, okay? What is the obligation of company? To make payment, right? To pay you salary. Let's say the first month, the company doesn't make payment to you. What do? You go to the HR, you say I have not received my remuneration. So let's say company is short of funds and HR is asking more time to make payment to the salary, okay? And you also agree. Let's say this keeps continuing in the second month, third month and fourth month. How long will you keep waiting? You also need money to do your requirements, right? So what I'm trying to say is, if at all there is a breach of contract committed by the company, you will have the right to file a suit in the court, right? When will this be possible? If the contract is valid. That means, who should fulfill the obligation of paying salary? It is not a member, not a director, but the company alone. Whatever salary is paid to you, that is paid from the assets or the funds of the company. The funds of company is separate and the funds of members are separate. No member or director is responsible for paying you salary. Only company is responsible. Now for every contract, it is valid if it is in writing to be signed, right? Company has no hands. Company did not think. Now who are acting? It is the management. It is directors who are acting on behalf of the company. Okay. So earlier in the old Act, Companies Act 1956, common seal was mandatory. Okay. Every company should have an official signature where it should be affixed on certain contracts and agreements mentioned in the articles. Now in the year 2015, okay, there was an amendment where common seal was made optional. This year is important. You'll have to mention in your exam. In the year 2015, common seal was made optional. Okay, then we'll understand what happens when a company does not adopt a common seal. So first of all, common seal is the official signature of a company which is affixed by the officers, that is a company secretary or any director, who will have the safe custody of the common seal, and employees of the company, that is the authorized employee. Not every employee will get access to common seal on its every document. Okay. Next, Companies Amendment Act 2015 has made the common seal optional. Now, after Companies Act 2015's amendment, any company which is incorporated or previous companies may decide whether to continue having a common seal or whether to adopt a common seal or not. If a company has no common seal, if they feel let's not keep it or let's not adopt it, then does it mean the contracts will not be signed? Does it mean the contracts become automatically valid because company is an artificial person? The answer is no. Someone else should be signing the contracts on behalf of the company. Now who are they? One company secretary should sign plus one director should sign. This is the first option. Okay. Second option is, if at all there is no company secretary, any two directors who are authorized in the board meeting to affix their signatures on the contracts will be responsible. Okay. Why two options are given? Because not every company should have a company secretary, a whole-time CS. Only listed companies and companies, be it public or private, having a paid-up capital of 10 crores or more, only these companies should have a whole-time CS. Rest all other companies need not appoint. So whichever companies don't have a whole-time CS, any two directors will be affixing their signatures on the contracts. Okay. In case a company does not have a common seal, the authorization shall be made by two directors or by one director. This is a director means one director and the company secretary wherever the company has appointed a CS. Okay. So this is the concept of common seal. So need to remember that it is optional now. If at all you are going to start a company, you can decide whether to adopt a common seal or not if you are the director of the company. Okay. So these were the features. Let's quickly summarize. Separate legal entity, that is company is identified as a separate person in the eyes of law. It cannot be clubbed with the identity of members or the directors. Okay. So next concept you will be learning about corporate veil, lifting of corporate veil. There are certain situations where you are disregarding or ignoring this separate legal entity principle. Okay. We'll understand with the case law. You will have a better clarity on this principle. Next, perpetual succession, that is continuous existence. Any changes in membership either by death or transfer or insolvency will not affect the functioning of the company. Limited liability, the liability of members will be limited. It is either limited by shares or limited by guarantee. Whatsoever, the members cannot be called upon to contribute more than what they have agreed. Okay. The liability will not reach to their personal assets. If the business assets are not sufficient, then the members are not responsible. But if at all a company is registered as an unlimited company, then yes, the members will be personally liable for the debts of the company. Then artificial person, because a company is treated as a person. It has privileges of a natural person with few exceptions. Last one, common seal. Now, companies may have a common seal or may not have a common seal. Okay, if there is no common seal, one director should sign and a company secretary should sign. If there is no CS, any two directors who are authorized in the board meeting will have to affix their signatures on the contracts. So, these are the basic features of a company. Okay. So, in the next session, you will be understanding about a very important principle, which is corporate veil. You will be understanding one case law on separate legal entity, as well as you will understand when can this corporate veil be disregarded. When can you make members liable for the actions of the company? Okay. So, this is all for now. Thank you.